Welcome, everybody, to our webinar. We're just going to give it another minute. We're going to start at 12 o'clock, right on time, and we are going to have a great discussion about what to talk to your CPA about for tax planning and what you need to prepare ahead of time. And if you have any questions or comments, you can toss them in the chat. And we will have discussion time afterwards. We are looking at about 25 minutes that the presentation will last, and then we have plenty of time for questions afterwards if anybody has any questions. And this is being recorded, so you will get a recording of this afterwards. So in case you weren't sure of any information, we have that. And I'm going to get myself set up and I'm going to share my screen. All right, and I'm going to get started. So welcome. My name is Alisa McCabe. I'm the owner at First Steps Financial, and this is our webinar on year-end tax planning prep guide for business owners. And the purpose of this is so that you can really maximize the conversation that you're going to have with your CPA about tax planning, which is what the conversation you should be having now with your tax professional. So why planning before you meet your CPA matters? So when you understand your financials and you can have a deep understanding of why you're there, what the conversation is going to be about, and you are armed with good information, it can prevent these unexpected surprises that happen. There is nothing worse than a client being upset that they come back to us and they're so upset because their accountant told them that they owe tons of money and they aren't ready for it. They don't understand. They're not sure why that's happening. And that's a sickening feeling to have, that you owe all this money and you don't know why and you don't have it. So that's why it's really important for now to plan for what's going to happen when you file your taxes in the spring, in April. So I have some resources here listed. There is Dr. Jackie Meyer. She's a CPA. She has a newsletter called The Balanced Millionaire. And one of her famous lines is, "There is wealth to be found in taxes." And I do love that because it is really, it's a unique thing to say. And I love her newsletter because she talks about things that even I haven't heard about. And so it's a really great resource. I also have a checklist that you want to bring or just read through before you meet with your CPA. And these are both links and they'll be available to everybody afterwards. You're going to get an email that'll have these links for you. So the first thing you want to do before you meet with your CPA for tax planning is make sure your books are up to date. And why does this matter? Because if your CPA doesn't have accurate information, they're not going to be able to give you a good strategy because it won't be based on reality. So, of course, make sure your accounting records are accurate and current. Reconcile all bank accounts, credit card accounts, loan accounts through the most recent month. And then review your balance sheet. The balance sheet is the forgotten child. People tend not to look at the balance sheet because they probably don't understand it, but look through it. Look at anything that's uncategorized. Look at something negative balances, something that you think is off. If your bank account doesn't look right, or there's a loan there that you know you've paid off, or there are vehicles on your balance sheet that you don't even own anymore. Review those things. If you're not sure about how to get those things off, or there's something on that end of it, you can discuss it with your CPA. Bring it to us. We can clean up your balance sheet so that you have a clear understanding of what's there. Then verify, go over to your profit and loss, verify that your income and expenses are recorded in the correct accounts. This can happen sometimes in accounting software, because sometimes things get categorized incorrectly. Amazon's a big one because it comes in maybe one time as office supplies and another time as equipment. And something you definitely want to check on and make sure that those things are correct. We had a situation where income came into the account and there was an invoice for a client for $10,000, but the owner had actually transferred $10,000 into the business. We can't see the difference, so we had to ask about it. But it is something you should check because you do not want to be taxed on money you are putting into the business. If a client pays you $10,000, that is taxable income. But if you're putting money in, it is not. And that's a big difference. Also, ensure that payroll is fully recorded, that everything's in there, that all bonuses that you've given out for this year and any of your owner's draws and contributions are correctly recorded in your books. So review major changes that happened this year. Why it matters is because they have impacts on how your CPA is going to talk to you about a tax strategy. Did you have new hires? Did you have any major purchases? Were there changes in owners? Did you give somebody equity in the company? Those are huge changes. And you may be wondering about new hires. So say you're based in New Jersey and you hire someone in Utah. There are situations when you hire somebody in another state that might require you to file amounts on that in that state. And that's something that you need to figure out. Did you add any new products? Did any of those things, or services, or do you have a new location? Did you open a new location? Those are major changes that you should be talking to your CPA about. Did you receive any grants? There's a lot of grants available to businesses, but you need to record them. Credits, forgiveness of income, that's another major one. And any big personal changes. Did you get married this year? Did you buy a home? Like there's lots of things that will affect the conversation. So make sure that you review any major changes that happened. And sometimes we have something happen to us and we don't think it's a major change. We don't realize that it affects the conversation that we're going to have. Third thing you're going to do is estimate your year-end profit. And why does this matter? The earlier you know what your expected profit is going to be, the more options you have to manage any taxes, anything that you can do for your taxes before December 31st. There are certain things that you have to do before year end and things you can do after year end. So ask your accounting team for a year-to-date profit and loss, and then project out to the end of the year what your profit might be. This way, it's going to give you a rough idea of what your taxable income could be, and then make sure that you look at all sources of income, because you may have a situation where maybe you have two businesses and you want to know each one how much you would get. And if you don't bring in both of those incomes, your CPA is only going to be talking about one. Make sure that you have all sources of income in front of you and that they will be able to see it. It will help them. It'll help your CPA to suggest a plan for timing of expenses and bonuses and your retirement contributions. Fourth, gather all your documentation. Now, I think you should gather documentation throughout the year. Don't wait till the end of the year. I know a lot of stuff gets sent at the end of the year, but what you want to do is make sure that you have all these things available. Now, I like redundancy. So I would like to see it in a paper form, filed somewhere, on your computer, saved, and saved in the cloud. And most CPAs in this day and age have a cloud filing system, and you can put all your documentation there. And they should have a link to that. They typically keep it in their signature, which I love. Oh, thank you, CPAs, for doing that, because then I can just go back to their email and click on it and open it up and put things in there throughout the year. So what you want to track is charitable donations, anything that you've given during the year. What's going to be your mileage for the year? What about home office information, major purchases or equipment that you've already made? You want to have the receipts for anything that you purchased and make sure you track it and upload it into their portal, into yours. Just save information on it. Retirement plan contributions, or if you took money out of your retirement, you want to make sure that they know about that too. And then your health insurance and your HSA information and medical, anything medical, you want to track all that information and make sure you have documentation on it. The fifth thing you're going to do is you're going to plan cash flow for year-end moves. How much money, and I mean cash in hand, are you going to have to take advantage of any tax saving plans that are suggested? So your CPA may suggest making a year-end purchase or contributions to reduce your tax burden. But can you afford it? Decide ahead of time how much you can afford to invest in equipment or bonuses or retirement funds. So review these cash balances and what your upcoming obligations are going to be for from now until the end of the year. How much cash will you need? When can you do this? Um, Honestly, you don't ever want to be short on cash. Cash is king. There's a reason why that's said over and over. Um, there may be, you want to plan for this. So maybe you won't have it now, but know that you're going to get paid in January for a big job you're doing right now. So you will have cash in January. That's okay too. Just know how much cash you're going to have to take advantage of any suggested plans. Also, the educated consumer is the best one. So what I would love for you to do is to be able to bring some questions to your CPA. Ask them, what is the most strategic plan to reduce it? What can I do now to plan for next year? So there might be changes that you want to make now that will actually impact your taxes done for 2026. Ask the questions. Ask them if there are any deductions or credits that you haven't been thinking of, given your financial situation. And always ask about optimizing your retirement. Throughout my career, there have been times in my life where my CPA has given me different advice on retirement. Ask, it's worth it. And also, this is a big question. Is your business structure still the most tax efficient for your long-term goals? This might be a deep discussion that you have with your CPA, because you are going to be talking to them about your long-term goals, your short-term goals. What are those things? And when they know that information, they're going to be able to help you make better decisions. And that's what all of this is about. It's honing a relationship with your CPA so that you feel super comfortable with them, so that you can ask these questions and that you come to them as an educated person asking questions that you understand. So this is what your CPA is going to ask you. Again, your CPA needs to understand your unique situation, and these are the key questions that are going to help them give you a good picture and help them give you a plan to achieve your goals. So, what are your short-term goals? What are your long-term goals? And before you go see them, be ready for that answer. Write down, like, oh, we're thinking about buying an investment property. We're thinking about retiring next year. Give them the information, but you have to think about these questions ahead of time. This is a big question that I think people don't think enough about. How comfortable are you with financial risk? And this goes right along with tax strategies. There are some tax strategies that are very aggressive. And if you're not comfortable with it, it's okay. Just know that your risk tolerance is lower. And there's never a wrong risk tolerance. It is what you're comfortable with. You can't be losing sleep over things just because you think it's the right thing to do. Also, talk to them. Your CPA is going to ask you about upcoming life changes. So hopefully you have told them about past ones, and they're going to ask you about, is there anything else coming up? Do you expect an inheritance in the next year? Is there, a new child on the way? Like anything that can happen. And as business owners, like, are you planning something for next year? Is someone going to become an investor? Is there going to be a change in your business structure? Are you moving to a new state? What is going to happen that you plan on happening? And that way it allows you to collaborate with your CPA to make really good decisions that will benefit you. So being thoughtful about all these questions ahead of time will allow you to have a deeper and more productive conversation. So, what are these wrap up steps? So, if you want to maximize your tax strategy with your CPA, this is an ongoing process. This isn't a set it and forget it because things change throughout the year. So, you're going to turn this meeting that you're going to have before year end into a year round collaboration with your CPA. Now, when something happens in your life, tell your spouse first, then tell your CPA, and then you might need a lawyer. But that's the direction you should be going in, is thinking, keeping your CPA in mind about when things happen. There is nothing worse than a CPA finding out after the fact that you took money out of your IRA and you have to pay a penalty. And they tell you, oh, wow, if you had come to me, I would have told you a different way to do it. Um, we have people all the time that start businesses and they don't get any advice from anybody, including us. They just do it. And it is so imperative that you talk to somebody who can give you the pros and the cons about these different things and help you create a situation that is beneficial to you and your loved ones. So schedule quarterly meetings. Think about this. If you have even just a brief meeting with your CPA every quarter. And I highly suggest, as a business owner, have your accounting team, have your CPA, have your investment person, whoever's in charge of your investments, have quarterly meetings with the three of them together. And if needed, bring in a lawyer if you are going to be making any legal changes. But having those three people in your life aligned with everything that is going on with you is gold in your pocket. They can help you find wealth in all the things that you're doing. This has been something that some of our clients have embraced, and we love it because we can help them achieve their goals. The CPA helps them achieve their goals, and the investment person knows the whole picture and can really maximize all those venues for them to be able to achieve what they want to achieve. I think this is probably the most important thing I want everyone to take away is be honest. Be honest with your CPA. Use this time to decide what you want to talk about. And don't be afraid to ask if you don't understand something. You're not stupid. You probably don't have an accounting degree. They've been doing this a long time. This is what they do for a living. If you don't understand, ask. This is your money and your life. And if you don't feel comfortable or you don't feel like you're getting good answers, it does not mean that your CPA is a bad CPA. It does not. It's like dating. You have to get along with this person. You have to understand each other. You have to both speak the same language and communicate on the same level. Find another CPA. You might have to date around a while till you find one that gets you and you get them. It really is like matching personalities. You really want to find someone you can be honest with, you can ask any questions of, and that you feel really comfortable going to. And of course, I'm going to think this is very important, but you need to maintain organized records. You need to keep meticulous records of everything that goes on in your business. And having these in a system like QuickBooks Online is incredibly important. And it also makes everything really easy. So your CPA can look at it anytime. You can look at it anytime when it's organized and everything in there is accurate. And then once again, make sure that you are communicating with your CPA about major life events. I'm going to stress it again. Major life events, talk to your spouse first, talk to your CPA next. it is really important to talk to them about things that might be happening. You might need to change something because, an event happened. You got an inheritance that you weren't expecting. Talk to your CPA about that. How's the best way to handle this? Instead of waiting until the time is past and you don't have any options left. So I hope that this has been really helpful and that you feel empowered to talk to your CPA as though they're a trusted advisor, as though they are somebody that you can go to and have some really rich conversations, because they should be that person that is on your side, that person that you want to talk to. And I hope I've given you some information that you can bring to them, that you can ask questions so that you can feel like you're educated about what you need to talk about asking questions. And when you get an answer, to really think about what am I, what do I want from this information? What am I going to get? And how can I use this information? Um, it is really important to have that open line of communication. And if you're not sure where to go or like how to have that initial conversation, start with someone that you are comfortable with. So if it's your lawyer or if it's a bookkeeper, or a lot of times we initiate conversations with CPAs. Our clients will come to us and we have that conversation with them, and we prep them for the meeting with their CPA. And we bring all the information, all the financials, and we support them in the conversation so that they can come back to us and ask us, what was that? I'm not sure I understood. And we will actually loop in the CPA and say, like, hey, can you explain this again? Because we want to make sure that everybody's on the same page. Does anybody have any questions about what you should be thinking about before seeing your CPA? Any questions about documents that you should or should not bring? Like, what makes the most sense? Um, there are so many situations. If you're expecting a loss this year, or you had a loss last year and you have a huge profit this year, can you bring those losses forward if you didn't take advantage of them last year? There's a lot of really good information that your CPA can give you, but you have to ask the question. I find that sometimes if you don't ask the question, it's not something that your CPA will always think about. So I see someone has a hand raised. If you have a question, you can put it in the chat. And also, everybody's going to get an email after this, and it's going to have the recording, and it will have my email, and you can always ask me questions. And we have a host of CPAs that we really, really like, and that we refer out, and there are CPAs that we've used and that we really like. So I look forward to talking to everybody. Thank you so much for coming. And next month, I am going to be doing an interview with David Bush from BDR.ai, which is an automated sales system. And he's going to be interviewing me about financial processes. And that, I believe, is on November 20th, but I will send out an email with a link to register for it. As a business, what documents do we need to provide to our CPA? So you want to have, if your CPA is new to you, you want to have last year's tax return. You want to make sure that you have all of your bank statements, any investment accounts that you have, and make sure you have payroll. And payroll is so important to provide to your CPA. We have a longtime client, and they started with a new CPA. And they were doing tax planning. It was this time of year. They were doing tax planning. They sent the CPA the payroll information, and the CPA looked through it. He immediately called the business owner and he said, someone in your office is committing fraud. And they knew from the payroll reports, and no one had caught it. It had been going on for 8 years, and no one knew it. And the owner was checking payroll. So it's not like they were not aware of payroll and were just letting someone else do it. They were actually checking it. This person was very sneaky about how they did it, but the CPA caught it. Bring your payroll, bring anything else, any third-party documents that will verify your information that you have. Bring your reports from your QuickBooks or from your financial, your tax software, your accounting software. You want to bring profit and loss. And depending on if you're filing on a cash basis or an accrual basis, I suggest bringing both reports with you. If you're a cash filer, they're only going to file on a cash balance, but it will help to look and see what's on the accrual so you can see what you're expecting to happen in the future. And if you have gotten any IRS letters or state letters from state treasury or tax departments, bring those to your CPAs immediately. And sales tax, they're going to check on your sales tax. So if you have sales tax filings, I would bring all those. And if you are subject to sales tax, you would want to bring a report of sales by state, because they will confirm that payments were made properly. All right. So thank you everybody for showing up. It was great to see everybody. I hope you got some great information, and I will be catching up with you soon. Take care, everybody.